All right, guys, so this is Cindy Presgraves with Cindy's Realty Group, and today I'm going to talk about mortgage rates. No, I'm not a lender, okay? I am not a lender. I really don't like numbers. But anyways, let's talk about the hot topic that has been happening in the past 12 months. And guess what that is? Relationships? Oh, no. We're not talking about that. Okay, we're actually talking about mortgage rates. We're talking about real estate today, okay? So here's what's going on is mortgage rates are dropping. And what does that mean for you? Okay, we've been up and down, up and down, up and down. It's been a roller coaster of events lately. And you know what? Mortgage rates have been actually the hot topic in the housing market over the last 12 months. I told you guys it was not only relationships. Geez. Well, then again, real estate is kind of like a relationship. It's a roller coaster of events. It all depends. But compared to the beginning of 2022, rates have risen dramatically. Okay, the beginning of the year, you could have gotten a house for under 4%. March under 4. Believe me, I was in the wagon when I was buying my house this year. I was like, well, I'm gonna go ahead and buy my house, and I was waiting for those rates to come down, from a 3.25% because I didn't decide to lock it in. This is back in February. I went down with a 3.75% interest rate. So yeah, I kind of slept there. But anyways, now they're dropping, and that has to do with everything happening in the economy. So what does this mean for you? It's the mortgage rates have been going up. Now they're coming down. What's going on? Inflation, all of these little things. So Nadia Evangelo, Senior Economist and Director of Forecasting, the National Association of Realtors, which is NAR, I belong to that, explained it well by saying mortgage rates dropped even further this week as two main factors affecting today's mortgage market became more favorable. Inflation continued to ease while the Federal Reserve switched to a smaller interest rate hike, which is a good thing. It is a good thing because when inflation comes down, that means interest rates drops. But if inflation is up, that means interest rates are going to go up. So do we really want to do that or not? Listen up. Okay, so let me continue explaining to you guys and how this is going to affect you guys and what are the next steps you guys should do in order to actually buy a home. And people, I don't want to hear it. I've been hearing it for the past 12 months. Oh, this is going to be 2008. I'm just going to wait till the market crashes and no. And I just listened to all my other videos so you guys can have a little bit more perspective on understanding what's really going on the market. But anyways, as a result, according to Freddie Mac, the 30-year fixed mortgage rate fell to 6.31% from a 6.33% the previous week. That's good. You're like, oh, but it's only 2.2. Okay, it makes a difference, people. It makes a difference. A little bit is a little bit. It doesn't matter. It counts. So what does that mean for you with your home ownership plans? Okay, as mortgage rates fluctuate, they impact your purchasing power by influencing the cost of the buying home. Okay, we need to find out what your buying power is completely, right? If you have a buying power of, let's go ahead and buy your house. But that way, if that interest rate increases, that's not going to help. But if it decreases, that's going to help a lot because the smaller the interest rate, the bigger the house. But the bigger the interest rate, the smaller the house. And we talked about this so many times. So let me continue in telling you guys on what's really going on and how this is actually going to help you during the next few months. And this is what I'm telling people. Look, if you fall in love with a house, marry the house, buy the house, and divorce the rate. And you're like, okay, that is so cliche. I don't want to hear about that, blah, blah, blah. You're going to get the house at that price, right? The interest rate, you can always refinance. And I've done this in the past. Personally, I've done this so many times. Like, I don't care about the interest rate. If I like the house, I buy the house. That's it. So even a small dip can help you boost your purchasing power. And here how it works. The median price home, according to the National Association of Realtors, NAR, is 379,000, right? 379,000. So let's assume that you want to buy a $400,000 home, right? So if you're trying to shop at the price point and keep your monthly payment about 2,500 to 2,600 or below, here's how your purchasing power can change as mortgage rates move up or down. And I'm going to show you guys I'm going to give you guys a little bit of examples and all that. So let's say for instance, you are looking at a $360,000 home, right? With a 6%. So if you're looking at a $360,000 home at a 6%, right? It would be, your payments would be approximately $2,100 a month, 2,158. But if you're looking at a 0.25%, 6.25%, your payments are going to go $100 more. So that means instead of 2,158, it's going to be 2,117. But if you're looking at an interest rate out of 6.5%, you're going to look at a 2,275%. Sorry, $2,275 per. So it increases, like it can increase. So that little interest, that fluctuation is so important. So that's why I'm saying that even though you're looking at an interest rate, it can actually change. It can actually make a huge difference in your payments. So this goes to show that even a small quarter point change in mortgage rates can impact your monthly mortgage payment. That's why it's so important to work with me and let me tell you how can I help you and give you your options. People, I've been getting a lot of people lately not understanding that you need to get pre-approved before looking at a house. And this is why I'm telling you, it's not because I'm wasting my time. Yes, I am wasting my time if you don't get pre-approved, because I don't, first of all, I'm not going to be able to know where can we look at, what your price point is, what options you have. Like yesterday, I had a lady, she contacted me like a few years ago, like last year, and she's like, I want to get the most bang for my buck. Okay. I told her the first thing is, if you have three people going the mortgage, means your husband, your daughter, and your son-in-law, then we need to know what you guys are actually working with. You need to get pre-approved, because then I can find out what your purchasing power is. She's like, no, I want to find the house first, and then I went like, no, it doesn't work that way, because that way I can actually present you options. So that way I can actually tell you, okay, so you got, this might be an option, mortgage A, B, C. I'm not a lender, but I like to look more in depth with that, because that way I can help you. So whenever I actually present the offer, that's really important for me, because I know with what I'm working with, and talk to the listing agent. I'm a buyer's agent and I'm a listing agent as well. So that makes such a difference too. And that way it makes me more confident that I'm working with my buyer and knowing what I'm working with and getting myself into. Because sometimes you don't have the down payment. Sometimes you need a little bit more. Sometimes you need that rate to come down a little bit. Sometimes, hey, you know what can we work with? There's so many things. And especially with mortgage rates fluctuating nowadays, it's going to depend on what happens with inflation moving forward. But they have dropped slightly in the recent weeks, which is awesome. In a few weeks ago, 7%. And if a 7% rate was too high for you, it might be time to contact your lender and see what options you have now. Because if it's gone from a 6.33% to a 6.31%, that is gold for you. And that can make a difference in payments. So this is Cindy Presgraves with Cindy's Realty Group by EXP. And let me know if you guys have any questions, and follow me for more, comment, and let's go from there.